Hi, this is PR Sundar. Welcome to stock recommendation video. So far, I have recommended two stocks. One is Reliance Industries, second one is ITC. And today, I am going to introduce one more stock. And before that, I would like to tell something. Many people have bought ITC based on my recommendation, and now they say, sir, you told us to buy Reliance, the price has gone up significantly from your recommended level, but ITC, why it is not going up? You must understand the basic difference between growth stocks and value stocks. And growth stocks have lot of growth potential and they will not offer good dividend yield, because whatever profit they are making and they reinvest in that company to expand the business, and they are called growth stocks. The stocks that are giving high dividend yield, they make so much profit, but they really don't know what to do with the profit because they have no scope for expansion of the business. That is why they distribute that profit as dividend to the shareholders. So, high dividend yield stocks may not give a very good capital appreciation, but despite that, I have recommended few stocks in 2014 while I was an expert in Sun TV, stocks like Tata Investment Corporation, Balmer and Lorry, and few other stocks, Rane Madras, Rane Engine Valves, and the entire Rane Group. At that point of time, the dividend yield was more than 8-10% for all these stocks, and these stocks has given more than 100% return in the next few years. So it is not that they will not give the capital appreciation, but our expectation should not be very high. That's because you are getting the dividend. I personally bought ITC and now the price is down, and again I bought and averaged it. My average price is about 190 rupees and I am happily selling call options, and every month on an average I am making 3% return by managing to sell call options. 3% per month through the call options. In 33 months, I get back my money. In addition to that, I will be getting a lot of dividend also and some capital appreciation. So therefore, when we recommend, you have to see what kind of stocks we recommend with what objective we are recommending. Today, I am going to discuss about a stock which is also a value stock. It's not a growth stock. The name of the stock is Power Finance Corporation. Let us go into ticker tape. I use this tickertape.in for analysis. The link can be found in the description for this website. And this Power Finance Corporation is trading around 89 rupees. And historically, if you see, it has been trading between 171 and 55. And this in 2010, it has traded around 190. And after that, it has been trading within a same range. Let us look at just last 1 year. The last 1 year, it went to a high of 132. Now it has corrected, now trading around 90 rupees. And if you look at some data, it is trading only at 3.31 P ratio. This is one of the lowest P ratio stock traded in stock exchange. I am not talking about any XYZ stock, but Power Finance Corporation is a PSU stock, which is a stable company. Price to book ratio is just 0.37. And look at the dividend yield. Now you go to any bank, I am just looking some alternate to get some fixed return, and HDFC Bank offering only 4%, 4.25% interest per annum. Even you go for debt funds, liquid funds, they are giving only 3 to 4%. The Bharat bond offers maybe 5 to 6%. But all those instruments give only the interest, but there is no capital appreciation. But here you get 10% dividend yield, on top of which there is a possibility of capital appreciation. And on top of which you can also sell call options to make some money. Then you may ask one question, sir, what if they don't declare dividend from next year? And don't worry, and definitely they will declare the dividend, because they are not declaring dividend to reward you and me. The majority stakeholder is the government of India. The government of India wants more money, so they insist that all the profit-making PSU companies declare more dividend so that the government will get lot of money. So definitely these companies will declare lot of dividend and we will continue to get dividend. If you look at the sector PE is 21, whereas this company PE is only 3.31. Sector price to book value is 1.81 and this company is only 0.37. So sector dividend yield is only 0.85%, but this company gives more than 10% dividend yield. And forecast price upside for the next 1 year may be around 61%. And let us look at the financials. You can see 17, 18, 19, 20, the total revenue went up all the way, and profit before tax or net income this financial year it was slightly less. Probably that is the reason why the price has come down. And the earnings per share is almost 27 rupees. You are buying a share at 90 rupees. The company is making about 27 rupees per share as a profit. And payout ratio is 0.35. So holdings, if you see, 56% lies with the government and the remaining mutual fund, domestic institutions and foreign institutions. So retail people, they're just holding only 5.5%. So the floating stock is very, very little. So therefore, as I already explained in my last video, ITC, you can either go for cash secured put to buy at the lower level, or you can buy equivalent to one lot. I think the lot size is about 6,200 shares, and the total it may be around 5.5 to 6 lakh rupees required for one lot. You can buy 6,200 shares in the cash market and you can continue to sell call options to make some more money. So in my opinion, this may not be a fantastic runaway multi-bagger, but you can make at least 25 to 30% return with a combination of capital appreciation, call option as well as the dividend. So hope you enjoyed the video. See you next time with another stock. Next time, hopefully I will give you a growth stock. Thank you.